You're not broke by accident. You were designed to be. While you were taught to work hard, save money, and climb the ladder, someone else was building the ladder itself. And here's what nobody wants you to know. The system doesn't reward hard work. It rewards ownership. The moment you understand this single truth, everything about your financial life starts to make sense. Let's talk about something most people won't admit out loud. You work 40, 50, maybe 60 hours a week. You're smart. You're capable. You do everything you're supposed to do. But somehow, at the end of every month, there's more month than money. You look at your bank account and think, where did it all go? Here's the uncomfortable truth. You were never taught how money actually works. You were taught how to earn it, sure. But earning money and building wealth? Those are two completely different games. And right now, you're playing a game where the rules were written by people who don't want you to win. Think about it. 12 years of school, maybe 4 years of college. And in all that time, not one class on taxes. Not one class on investing. Not one class on how the Federal Reserve controls your purchasing power. Not one class on the difference between assets and liabilities. Instead, you learned calculus you'll never use and memorized dates of wars you'll forget. This isn't an accident. This is design. The average American is $78,000 in debt. Credit cards, student loans, car payments, mortgages. You're not just broke. You're negative. And every month, you're paying interest to someone else. You're literally paying for the privilege of being in debt. Meanwhile, the system tells you this is normal. Everyone has debt, they say. It's just part of life. But here's what they don't tell you. While you're paying interest, someone else is collecting it. While you're working for money, someone else's money is working for them. Two different games. Same economy. Let me explain how this actually works, because once you see it, you can't unsee it. The American economy runs on a simple principle. Consumers consume and owners own. You were raised to be a consumer. From the moment you could watch TV, you were taught to want things. The new car, the bigger house, the latest phone, the designer clothes. Success became defined by what you buy, not what you build. So you graduate, you get a job, and you start buying. You finance the car because everyone needs a car. You swipe the credit card because you deserve it. You take out the mortgage because renting is throwing money away. And suddenly, you're on the hamster wheel, working to pay for things you bought to impress people you don't even like. But here's where it gets interesting. Every dollar you spend on payments is a dollar that can't work for you. That $500 car payment? Over 5 years, that's $30,000. Not invested, not growing, just gone. The credit card interest? That's pure profit for the bank. They didn't work for that money. Their money worked for them. This is the game. The wealthy understand that money is a tool that should work for you. The broke think money is something you work for. It's a fundamental difference in mindset that creates two completely different financial realities. Look at how the rich actually operate. They don't buy cars. They write off leases as business expenses. They don't save money in checking accounts earning 0% interest while inflation eats away 3% of its value every year. They buy assets, real estate, stocks, businesses, things that generate cash flow, things that appreciate. Warren Buffett's company, Berkshire Hathaway, owns pieces of American Express, Coca-Cola, Apple. He's not working 40 hours a week at a job. His assets are generating wealth while he sleeps. That's the game. Meanwhile, the average person is taught to save. Put money in a savings account. Be responsible. But here's the reality. Your savings account pays you 0.5% interest while inflation runs at 3 to 4%. You're literally losing money by saving it the way they taught you to. The purchasing power of your savings is being destroyed, and you think you're being financially responsible. The system is designed to keep you working, spending, and owing. Consumer debt in America is over $16 trillion. $16 trillion. That's not a bug. That's the feature. Because every dollar of your debt is someone else's asset. Your mortgage? That's a bond that investors buy for steady returns. Your credit card balance? That's profit for banks. Your student loan? That's guaranteed income backed by the government. So, why were you never taught this? Why does the system work this way? Because the economy needs consumers more than it needs wealthy people. Think about it. GDP, the measure of economic success, is based on consumption. If everyone stopped buying things they don't need with money they don't have, the economy would collapse. The system requires you to spend. Corporations need customers. Banks need borrowers. The government needs tax revenue from your income. Your financial struggle isn't a personal failure. It's a systematic outcome. You are taught to trade time for money because that's what the economy needs. Employees, workers, consumers. You weren't taught to buy assets because asset owners don't spend money the same way. They invest it. They protect it. They pass it down. That doesn't fuel the consumer machine. Here's the part that nobody talks about. Financial literacy is actually threatening to the current system. If everyone understood how money really works, if everyone stopped financing depreciating assets and started building wealth, the entire consumer economy would shift. Credit card companies would lose billions. Auto financing would collapse. The 30-year mortgage industry would transform. That's why this information isn't taught in schools. That's why financial education is something you have to seek out yourself. The system doesn't benefit from your financial independence. But here's the good news. Once you understand the game, you can start playing it differently. First, shift your mindset from consumer to owner. Every financial decision should be filtered through one question. Is this making me an owner or a consumer? Buying stocks? Owner. Financing a car? Consumer. Starting a business? Owner. Shopping for entertainment? Consumer. Second, understand the difference between assets and liabilities. An asset puts money in your pocket. A liability takes money out. Your primary residence? Liability. Costs you money every month in mortgage, taxes, insurance, maintenance. A rental property that cash flows? Asset. Generates income. Most people work their entire lives to buy liabilities and call it success. The wealthy buy assets and let them pay for the liabilities. Third, make your money work harder than you do. If you're trading 40 hours a week for a paycheck, but your money sits in a checking account doing nothing, you're playing the wrong game. Even simple index funds historically return 7 to 10% annually. That's your money working. Compounding. Growing. $1,000 invested at 8% annual return becomes $10,000 in 30 years. That same $1,000 in a checking account becomes worth $700 in purchasing power after inflation. Same money, different strategy, completely different outcome. Fourth, understand tax strategy. The wealthy don't pay the same effective tax rate you do because they understand how the tax code actually works. It's not about cheating. It's about knowing the rules. Real estate depreciation, business deductions, capital gains versus ordinary income. These aren't loopholes. They're literally written into the law to incentivize certain behaviors. Fifth, stop financing your lifestyle. If you can't buy it twice, you can't afford it once. Credit cards aren't free money. They're the most expensive money you'll ever borrow. Car loans turn a depreciating asset into an even bigger financial anchor. Every payment you make is wealth you're not building. Finally, increase your financial education more than you increase your spending. Read books. Listen to podcasts. Study how the wealthy actually operate. Not the Instagram lifestyle. The real strategies. Because knowledge is the only advantage that can't be taxed, inflated away, or taken from you. Here's what it comes down to. Being broke isn't about how much you make. It's about how much you keep and what you do with it. The system was designed to extract wealth from workers and concentrate it with owners. That's not a conspiracy. That's just how it works. But you're not powerless. You just need to stop playing the game they taught you and start playing the game that actually builds wealth. Stop being the customer and start being the investor. Stop financing things that lose value and start buying things that gain value. Stop working only for money and start making your money work for you. The gap between the wealthy and everyone else isn't talent. It's not luck. It's not even hard work. It's knowledge. It's understanding how money moves and positioning yourself to catch it instead of chase it. You're not broke by accident. But you don't have to stay that way by choice. The game is rigged. But now you know the rules.